Hello, folks. Welcome to the Weekend Investing Daily Byte of 28th of June, 2024. Uh, the story of the day are weekly options ending. This is the rumor that is doing the rounds, and we will talk about this. SEBI has also given some hints on this. The data is pointing to some action coming soon. We'll discuss this towards the end of the video. Where the market's headed. So Nifty opened gap up, slight gap up, went up all the way to nearly 24,200, then gave back the entire gains of the day and actually closed at minus 0.14%. Today was the fifth day running that the market was going up, and since last two sessions there was expectation that a mild correction actually should come around, and it has happened towards the end of the week. Friday, usually because there are, the weekend is a longer period before the next open. Not a lot of folks want to keep extended positions open. So whoever has gone long in the last 4 or 5 days is now sitting on huge profits, especially in leverage, and a lot of times nervousness will try to creep in. Imagine people who sold the market on June 4th and have been hoping that the market will turn down. I mean, the market has actually climbed almost 3,000 points since then, and there is no sign of coming down. So this entire recovery and going up actually has put people on the back foot in terms of trying to short the market. FIIs were big shorts in the market when this position was there. In fact, pre-election also they were big shorts, and now they are long side. So almost some the amount at which they were in short contracts. The other side now is the long contracts. Some 3 lakh contracts were short, and now you have 200,000, something like that. So now the FII position is actually a burden on the market, and it will try to have a profit taking every time it gets stretched. Earlier, because there were shorts, that was the support to the market in case it fell, and that's what exactly happened on June 4th. The market got supported because of all these shorts and very, very quickly. Anyhow, coming back to the indices, Nifty Junior, again a very insipid day, 0.26%, almost like that market is waiting for something, but right now it is not happening. Just very, very flat. Mid cap index slightly in the green, 20,800. It has closed at a new high at a 0.5% up, but no major moves coming through as yet. Small caps also almost 0.6% up, again within the same range as the last 7 or 8 sessions. So no real changes happening in the small cap world also. Nifty Bank is where some give up happened after this 3 or 4 days of run. So we lost about 0.9% on Nifty Bank. But given the stretch that we've had in the last 15 days, I think nobody's complaining about a small give back on the banking system. HDFC Bank, ICICI Bank, Axis Bank, Kotak Bank, all leading the private banks and the bank index down. Reliance, the sole sort of lead large cap leading from the front, and of course Geo has increased the pricing, annual pricing of annual and all their plans by somewhere close to 20%, and a lot of folks are not very happy with that. uh, that Reliance has come through, created a base at low costs, and now is increasing price. Well, that's what any business does, right? I mean, what is wrong in that Reliance was able to offer so much of broad base of mobile users? In fact, I would, if you ask me, Reliance has probably contributed in a very big way, in which the growth has happened in our country in the last half a decade, and it is purely because of this cheap availability of data, that every person is able to have market access. Farmers are able to see the prices of their crops. They are able, youngsters are able to learn from the internet. Of course, they can do all other things also, and I'll come to this next part. Uh, Also, where cheap data and lucrative trading has caused a lot of young folks to move to that side, which exactly is becoming a cause of concern. ONGC also up 2.5%. So yesterday you must have seen the debate between Biden and Trump, and within minutes of that debate kicking off, sites which track the odds for presidential wins suddenly saw spikes in favor of Trump. So after this first round of face off, the market is expecting Trump to really have the upper hand. And oil is one sector. Oil and commodities is probably one sector where Trump coming in will probably mean oil and commodities going up, because there is likely to be more geopolitical instability, given the firmness at which Trump may deal with China or Taiwan issue or things like that. So oil seems to be now going up, and just couple of weeks back, people were calling oil to go to $60, but it is just happening on the reverse side. So all these forecasts, as I mentioned in yesterday's video also, uh, don't really work. But on ground, oil and oil companies are looking up. Uh, Tata Motors did quite well at 1.8%. Bharti Airtel, surprisingly, despite rates of telecom providers now going up, with Reliance in the lead, dropped 2.15%, but it had gained quite a bit in the last few sessions as well. Rest, consumption, FMCG, pharma were kind of flat today. In the Nifty Next 50 map, capital goods segments that I was mentioning just yesterday that they keep going up was thrashed today. So Motherson down 4%, Siemens, ABB, Bosch, and all of these companies are actually above 100 price earnings now. So those who watch price earnings, they are saying that price earnings has become meaningless now, because Siemens is at 120, ABB is at 110, something like that. So it is all about how funds are moving in or out of a sector, and it is very difficult to gauge using these conventional metrics of valuation whether to buy or sell stocks. PNB, which was thrashed yesterday, gained smartly today. DLF, Geo Finance, Power Finance Corporation also doing well. Trent doing well, extremely well. Trent is that one stock which has just baffled all valuation pundits, where it has just gone from nowhere to where it is going now. I mean, the kind of move that Trent has seen, if you see its chart, is just mind-boggling. Vedanta, Zydus Life, Zydus Life were some of the few other gainers, and you had all the public sector enterprise stocks kind of muted today. So yesterday we had the huge uh, bump up in FII numbers, also largely due to the some institutional deals that were happening. DIIs selling 3600 and FIIs going long at 7600. So on an overall monthly basis, when you will see, FIIs are looking reasonably better off than many other months. Pharma 1.1% based on a couple of stocks, yes, but energy also up 1.1%. PSU banks up 0.9%, public sector enterprise 0.7%, and private banks, the ones that drag the market the most, were minus 1.2%. Commodities, metals, not extremely robust, but still 0.5% each, trying to recover from this weekly loss. Real estate on a monthly basis is still leading uh, the entire sectors, and on a 12-month basis, also at 113.6%, real estate is the leader. Oil and gas index at plus 1.6% is looking extremely robust now. I think there can be a very big move that can come in oil and gas, and one should look for uh, positions and setups in the oil and gas sector. In the longer term view also, you can see that it was consolidating in this range till end of 2023, and then there was this breakout and this minor consolidation that is there. It can do a continuation post this as well, but already from this point at 7,000, we are already up significantly as of now. In terms of stock spotlight, uh, CDSL gained 20%, almost 19% today at a new all-time high. It had been consolidating within 1800 to 2000 for the last 6 or 7 months. The news that was released was that it was on June 2nd, on July 2nd, they will consider a bonus issue. And as I've mentioned in the past, bonus issues are more or less accounting entries. Nothing has changed in the company, but because it's a psychological impact that yes, we are getting some bonus, uh, market men get very enthused, but actually speaking, nothing really changes from a bonus perspective. On a weekly basis, you can see that a breakout had happened here towards the end, third quarter of 2023, and remarkable rally since the COVID bottom. We had the stock go from 200 to nearly 1800, and then go through a correction, and now it is building upon that. So it can really go very high. I mean, in terms of technical makeup, the stock chart is extremely positive. Gold flat today, 0.16%. No moves to be seen here. So coming to this discussion about this weekly options story. So SEBI chairman has said that there is some talk of some derivative products going off the market. Uh, and there is an advisory committee that is going to deliberate on this. There is nothing final. Um, she mentioned that while the risk assessment and the risk management part of the market is extremely robust, so there is no risk because of weekly options as such, but there are other considerations that are driving these kind of potential decisions. So for instance, SEBI in that study has found that 9 out of 10 investors lose money in derivatives trades. So this is extremely worrisome in the sense that a lot of youngsters are getting involved in this speculative activity, yet nothing is coming out of that. uh, the exchanges also, and you can't really blame the exchanges or the brokers who are offering cheap market access, because that is their business to do that. The exchanges also are offering, all kinds of expiry settlements. So there is a daily expiry that is there. On Mondays, there is a mid cap expiry. On Tuesdays, there's a Fin Nifty expiry. On Wednesday, Bank Nifty expiry. Uh, Thursday is Nifty expiry. Friday, Banks and BSE Sensex and BankX expiry. And they are also creating those expiry schedules in such a way that every day there is something to play, and it's almost become like a complete casino out there with and mind-boggling numbers that are being churned there. There is another thought process that rising level of household savings is moving into speculation versus going into capital formation. So if somebody is saving 2000 rupees in a month, and it is not going to a fund or a stock, it is going into derivatives kind of trading. Options premium turnover has gone from 4.5 lakh crore to 140 lakh crore. I mean, just see the kind of uh, jump that is happening here. I mean, uh, this is something very extremely serious, that the not just the regulator, but this has become like a news all over the world, that what is happening in the India FNO market. So many commentators from outside the country who don't have any business of talking about the market here in general, but are perplexed as to what is happening in India, so that so much turnover and so much volume is getting generated in India. For instance, some commentator had commented that it is monthly average daily index option traded in US trillion terms is almost matching that of the S&P 500, which is a very deep market, and India market cannot be compared to S&P 500 kind of market. The options frenzy was also mentioned to be having futures and options turnover is 441 times bigger than the cash market, and it was only 32 times before the pandemic. So market has gone up more than 10-15 times in terms of the relative volumes versus cash markets. And derivatives turnover overall has gone from 210 lakh crore to 500 lakh crores in the same period. And this is the biggest part, that the share of individuals in options trading has risen from 2% to 41% in 6 years. So 6 years back only, if 100 entities were trading, 2% were individuals. Now 41% are individuals. So more and more people are getting sucked into uh, this trade where uh, while on one hand you can say that if people are willing to lose their money, who should have a problem with that? The entire system is making money out of it. So 90% individuals are losing money, okay, 10% are winning, but those 10% may not be individuals. They are probably very shrewd algo trading firms uh, who have the kind of hardware and software paraphernalia to sort of do hunting of stops and do things of that kind. So most individuals are not making money. Some institutions are making money. That is one concern. And secondly, of course, is that it is breeding a generation of speculators, which then raises a sort of a moral question, which really though has no right or wrong answer. Another one from Bloomberg was, just see the compounded annual growth rate of options contract uh, versus US versus other countries. We are just standing out versus the rest of the world, and that is causing a lot of narrative to be built around this, that what is happening in India. And probably there is pressure from Ministry of Finance to SEBI to do something so that this does not get out of hand in some way. Equity options volume, another one from another overseas source. Just see, the red bars are the India options volumes, and the pink bars are that of the US, and just see how we have gone from 2018 onwards, and this 24 is just a part of the year, so it will go even further actually up. So right now, I mean, there is no event that has happened because of which any concern is there. But I think SEBI is being proactive when it wants to, have a sort of a ecosystem where just one part of the market should not become, overbearing on the rest of it. If you just take one step back, derivatives are a product which derive value from the base. So if Nifty options, they derive value from the Nifty levels. Now the derived options part becoming so large, it's like the tail wagging the dog. So options market can influence where Nifty will be rather than Nifty influencing where the options market should be. So this is a lopsided sort of a market, which I think the recognition is there that either some derivative products will be taken off, like is the rumor, or taxation will be increased substantially, so that it becomes a little difficult to make money. Well, already 90% people are not able to make money, so I don't know how much sense that will make to increase taxation on derivatives trading. Increase of margins is probably one of the cleanest ways in which this practice can be curbed to some extent. You increase the margins so that at least people are not leveraging 50 times their capital, or 33 times capital, like in a lot of situations the brokers are providing to their users. So a significant increase of margin can cause at least some mellow down of the volumes in the market, and if that gives sanctity and better sleep to the regulator and to the finance minister, I mean, I think that's fine for the day. But it truly open market access, there should not be any intervention. But in a regulated environment, I mean, that is you know always not the case. You always get regulated, and anything that really takes off, regulation will come in fear of something going wrong, and that's what's happening right here. So let's see where this goes. If you are a options trader, please comment below. Would like to hear from your perspective, what should be or what should not be, if this is in the right direction or not. Maybe a lot of public comments can influence these advisory committees that are sitting to mend these current rules. So the more you raise your voice, the better it is probably that the regulator may hear you. Thanks. Bye.